Hello guys, welcome to another weekly breakdown video. This week I'm gonna analyze the markets for the new year as you can see, starting from 30th of December 2024. And before starting the weekly breakdown, let me show you the news. The last two back testing has been very quick due to it was Christmas and New Year, and we know that in Christmas and New Year weeks there is not much happening. Most of the days the market is doing anything, and most of the traders are not trading in those time zones. But due to I'm backtesting, I want to see what happens and if we get trades in this time zone, because while backtesting I want to learn as much as possible, right? So Monday, Tuesday, Wednesday there was no news. Thursday and Friday there was unemployment and ISM manufacturing PMI. So these are the news. And now starting with the weekly breakdown, clearly we can see the last week was not one of the best weeks. As you can see, it has closed as a very slow momentum, very low volatile week, and it closed as a bullish pin bar. And to confirm the bias, when I go to DXY, it is also not one of the cleanest, but it is looking like a bearish pin bar, not one of the cleanest. To be honest, in the live markets I would have not taken a trade this week. I would focus on something else, or I would focus on something else than trading. Maybe some other businesses, maybe some other my coaching, or my community, something like that, right? Some learning or some teaching others, making videos on YouTube, or some content. But I would have not taken a trade, even if it's New Year, bro. I would have made content obviously for social media and riding jet skis and stuff. Now going to the next week, if I'm looking for something on the weekly, my weekly is bullish, as you can see. And now that is when I go to the daily time frame. On the daily time frame, we have marked the supply, demand, no fair value gaps, market structure shifts, and the daily bias. The daily bias going on Monday is bullish according to how this candle closed. And if I go to DXY, and on DXY my bias is not clear, as you can see. GBP USD bias is bullish. DXY the bias is also kind of bullish, because this is not a bearish candle, and this is looking more of a doji indecision candlestick. So whenever the price is in indecision, whenever I see the market and at the first glance I don't this bias is not clear, or DXY isn't aligning with GBP USD, okay, so that is when I don't like to trade. But in this case, obviously I will look for some opportunities if we get. Not trading is totally fine. So even Euro USD was a doji, so not trading Monday was the best thing we could have done. And yeah, Monday I didn't take the trade because it was a very tricky day to trade, because we didn't had our bias ready. And now waiting for Monday didn't even give our bias. Waiting for Monday put even more confusion in the charts. As we know, this is not the time to be in the charts, to be honest, but obviously due to backtesting, so on and so forth. So Friday was a bullish candle, Monday was a kinda indecision candlestick, and now going on Tuesday my bias is again not clear, and my weekly bias is bullish. And whenever the daily bias isn't aligning, whenever the daily bias is not clear, we tend to trade with the weekly bias. But in this case we would have lost if we did that. So now Monday we didn't take the trade because my bias was not clear. Tuesday I didn't take the trade again because my bias was not clear. Simple as that, right? So now going on Wednesday, it is New Year's obviously. So New Year we don't take the New Year the markets are closed. So there is no Asian range on Wednesday and Thursday. So even on Thursday I didn't take the trade because there was no Asian range. I tried to find an opportunity to catch this sell move. It was making so much of sense to sell here according to my knowledge in the markets, but there was no Asian range, and our strategy is dependent on the Asian range. So on this day the Asian range was not available because the year has just changed. So I didn't do the trade. So waiting for Thursday now gave my bias so clean bias for Friday, which is bearish, and on DXY it is bullish, filled up the fair value gap and has entered the supply zone. So now going on Friday I was looking for sells. That is when I go to the lower time frames, mark the breakout structure. Previous week low has already been swept. This is the lower high, lower low leg. As you can see, this lower low leg has broke structure to the downside. So now we can anticipate on Friday to fill up the fair value gap or continue to the downside. I personally like to trading with the bias, which is continue to the downside. But in this case, to be honest with you, it's just by looking at it, it looks like it has been overstretched. The market has been overstretched, and this fair value gaps has to get filled. To be honest, it looks like that, but obviously I don't do that. So after Friday, if Friday closed as a bullish candle, so on Monday, next Monday, I will look to fill up this fair value gap, right? But in this case, I was looking to trade with the bias. If I was trading with the bias, it was clearly looking like a bearish week, as you can see. So this was a lower high, lower low, lower high, lower low, and somewhere around here, lower high to then to the downside. There was also a New York session right there. And I waited for the Asian range to close because my strategy is dependent on the Asian range. As I've told you guys, that is when I go to the lower time frames. On the H1 there was nothing. On the M15 there was a supply zone here, and also I considered this supply zone because this supply zone was made on one of the major sessions, which is New York, and New York session is one of the major sessions. And yeah, I would have taken this trade any day. Also the previous day volume was very high, which gives us confidence that we can take the trade from the closest zone. And this was a New York session zone, which gives us more confidence that it is a strong zone to trade from, so on and so forth. So this trade I took it on M5. On the M5 change of character, after drawing this Fibonacci retracement, entered at the 76.8% retracement. It was a loss, to be honest. Losses are part of the game. And on Friday I took a loss. So on Friday what I've learned is, obviously there were so many fair value gaps to the upside to get filled, but I don't trade with the fair value gap, so it is totally fine, right? But now, according to how this Friday closed, on Monday I will look for the fair value gap to fill. This is the beauty of this strategy. The beauty of this strategy is, even if you lose the previous day, the next day you totally know. Once you are analyzing the markets every single day, only focusing on one thing, which is front testing. Right now I'm focusing on back testing / front testing. That is why it is a bit more confusing. But when I will be doing one thing at a time, it will be so much fun to do. And yeah, that is exactly what I've done. It was a loss, to be honest, and losses are totally fine. It's part of the game. And yeah, basically Friday was a doji, as I've told you. Not a doji, a bullish candle. There is a fair value gap now to fill. So on Monday I will trade to fill up the fair value gap. I do exactly what the price shows me. I don't try to predict anything, because nobody can predict the market, right? Anything can happen anytime in the market. Anyone from anywhere in the world can change the market with huge amounts of money, right? Can move the markets. The market doesn't give a solitary fuck about a head and shoulder pattern or something else. The market moves due to liquidity, because people are buying. Supply and demand. It's basic supply and demand. If supply exceeds the demand, the price goes down. And if demand exceeds the supply, then it goes up. Simple as that. Head and shoulder is just a market structure pattern, which is a pattern like this is a head and shoulder, right? This is valid due to there is liquidity here, the price went up, swept liquidity from here, gave us a change of character. This is nothing but an accumulation, manipulation, distribution. Even I use this entry model, which is head and shoulders, but I name it different. Accumulation, manipulation, manipulated the highs, and then the change of character. That is when I tend to enter somewhere around here, right? So it's basically the same thing, but people give it different names, right? Everything has a name nowadays. So yeah, it's a bit tricky, but this week was a very, very tricky week to be in the markets, to be honest. That means Christmas and New York weeks are not worth it to be trading, which I've learned through my backtesting. So yeah, this is the weekly breakdown for you guys. Now going on to the next week, the bias is clear. I need to do two more backtests for January. Today 10 more backtests, sorry, and let's see, we will complete it. I said I will do it. That's enough reasoning for me to do it. Be a man of your words. Respect yourself.